What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go.
Awesome.
Welcome to Raise the Bar, elevated conversations around entrepreneurship, capital raising in real estate. Today's guest, AdaPia D'Errico, is a fintech pioneer and trailblazer in real estate crowdfunding. She led the first ever crowdfunded Series A, raising millions and reshaping how investors connect with opportunities. As a thought leader at the intersection of people, purpose, and profit, she's empowering others to invest with impact and innovation, making her a sought-after thought leader in strategic investor relations and growth. AdaPia, longtime friend, great to have you on the show.
It's so good to be here. Thanks so much for having me again.
Absolutely. Great catching up with you before the show
Yeah.
and all that. It's good to see you.
hmm
Well, look, I think a lot of people struggle with this question that are listening to this because we're all entrepreneurs. We do a lot of different things. But what do you say when someone on the street comes up to you and asks you what you do?
Yeah, that's a tough question because part of me wants to say, well, it depends if the person knows the industry that we're in, right? Or if they're completely newbies. So, obviously your audience knows what we're talking about, so we don't have to give like the 101. But if somebody comes up to me, I would say, listen, I'm an investor relations strategist and a growth advisor, and I work with private equity, private credit, and real estate investment firms to design, institution ready and scalable capital systems. So I'm not a capital raiser myself, but I build the systems that help firms scale into, multiple 100 million or even billion-dollar operations.
Yeah, and I think we can jump right in. I mean, I think a lot of
Yeah.
times that gets lost, right? Like a lot
hmm
of folks are like, how do we raise capital? So we get into like marketing and social media and launching a
Yeah.
podcast or, all those sorts of fun things. For some people, I guess some people it's a nightmare, but we get into those things and then what, right? Like, okay,
Mm,
we've raised some money, we've raised some capital, we've had some success, but what does that investor relations, communications, building a business, what does that look
yeah.
like afterwards? What are some of the struggles you're seeing out there, and how are people combating that?
Yeah, I mean, over the past few years, I think a lot of things have changed. And we can definitely think about capital raising, capital formation, and investor relations also based on stages of like what a company is in. And I know that you work with a lot of fund managers that are getting started. So if you're raising $500 million, you probably don't need a lot of operations. You need like good legal advice, like what you do. You need like the syndication structure, the LLC structure, and then you go out and because people know, like, and trust you, you can probably raise that first bit of money kind of easily, and that gets your feet wet, so you don't need a ton of operations. But if you're starting to do that like consistently over time and you're starting to do like 10, 15, 20 million annually, all of a sudden, and you have 10, 15, 20 SPVs, like you've got all these investors asking questions, you have investor reporting, you have marketing, you have customer service, and you might sit back and go, wow, I actually need probably a couple people on my team at least. And so where I see people struggle the most, even at those phases there, is they think they need to do marketing. And they focus entirely on marketing, on new lead generation, instead of really focusing on existing investors and retention and referrals. And because there's that chasing new capital, but there's also a lot of times latent capital. I call it latent capital. So don't forget about your initial investors. It's like the Kevin Kelly 100 True Fan Model. I think he wrote that like essay in 2009 where it says if you take really great care of your like 100 super fans, those people become your advocates, and then it's like these concentric circles of doing that for you. So to me it's very similar in investor relations where you want to be taking really good care of them, and there's systematic like operational ways of doing that. And as you're scaling your business where you're saying like I can actually make this work, and you start to have to think about, well, who are the right people on my team at what stage in time so that I don't lose track of those close investors, and I can scale and I can get new investors. And then just the bigger you get, the more complex it is. You want to start thinking about asset management, even if you are a fund to fund manager, because listen, like if you're raising most or all of the equity on some deals, you have control rights. You need to be underwriting, like who's doing your underwriting. So it becomes like it really it kind of mushrooms, and I think you want to get ahead of it. So I think that's where I see most people kind of trip and fall sometimes. And the last thing I'll say is that trust takes a long time to build, and it can be lost in a nanosecond. You miss a distribution email, you don't respond to something, like it's so easily lost, especially with investing. And that's why like I really hammer this home with people, like how important it is to do the boring old communications, updates, get a good investor portal. Like the things that are not sexy at all are actually the things that are going to help you the most.
Yeah, totally. You mentioned retention and referrals. Like that's what I'm seeing the most successful capital raisers do. They focus on
Yeah.
that, like taking care of their current investors and using them to get referrals, right? Because
Yeah.
that's your best asset is your current investors, and to get them to give you referrals to their friends and family that probably have money to invest, that are probably
Yep.
excited to invest. And that, that conversation goes a lot better than trying to constantly market and bring in cold leads, which you mentioned trust as well. Trust is easily lost, and it's hard to gain. It takes time. So if
Yeah.
you're just meeting a stranger that's not through an introduction, it's not through a referral, it's really hard to
Yeah.
gain that trust to get them to send you $50,000, $250,000. It takes time. It takes a lot of touch points. So that dries up pretty quickly. So you need to
Yeah.
really focus on your current investors and retaining them and treating them right and getting referrals from them.
100%. Yeah, that's exactly right.
Yeah, and you mentioned scaling. So where do
Yeah.
you need to start looking for help? Like at what point during the capital raisers journey do they need to find help? Like is it like a feeling like they feel overwhelmed, starting to feel overwhelmed, so they need to go find somebody, or
Yeah.
are you seeing kind of different stages consistently where people need to start looking for help and hiring people?
Yeah, I mean, I know from being like part of this like larger community of capital raisers, I know a lot about the earlier stage. I tend to work with later stage companies that have, even like 20, 50 employees, because you might be surprised to hear this, but a lot of times they don't have, I mean, they have staff, right, obviously, but they might not have a very cohesive system that allows for a kind of a machine around capital to be created. So I come in like those phases, but within the community of capital raisers and fund to fund managers, et cetera, I think it really depends. I think a lot of people, it is a little bit of that feeling, and a lot of times that can be mitigated with a virtual assistant as just like a beginning touch point. Like doesn't have to be a specialized person, but having someone to be able to take off some stuff off of your plate. Now, I think a combination of really good understanding use of AI and a VA will go a really, really long way, because you can simplify your life a ton with if you're using AI the right way. And then you have your VA. And then as you're starting to grow from there, I think the first thing that people usually go to is some form of a marketing assistant that posts social media. And again, like right now with a lot of AI tools, not so much on the posting side, but on the creation side, there's so many ways to really like ramp up your social media content, even though I feel like a lot of the written content is just, it's a commodity right now more than ever. So I think we're really going to be seeing a lot more on the video side, or a lot more on engaging in other people's posts. And like, I think we're going back to a world of BD and relationships and meeting people in person very much, just because there's just so much out there. But I digress. Having that marketing person is probably the first thing, because that's a whole operation in and of itself, like doing marketing, and you're going to have your newsletter, etc. Um, so that's where most people would start. I personally would like to see people after they have a marketing person, or it could be a part-time marketing, part-time IR, like an IR associate or junior IR person that's helping to ensure that the tedious stuff on the back end is taken care of, right? Like, where's my K1? I can't log into my investor portal. Like those kinds of questions. I don't want to see the capital raiser, the GP, doing transactional stuff with their investors. I want them to be doing relationship management with their investors. So having somebody there that can handle all of that, also from, let's call it signaling, because it's a real thing and it matters, kind of signals like, hey, I'm the GP, I'm your relationship manager, hey, you can talk to this person, they'll take care of you if you have any of these other questions. And that person can also help with you know, there's newsletters, there's investor reports, like just there's so much of this rote work that I would like to see that happen a lot sooner for more people than I see happening.
Yeah. Yeah, that's awesome. And shameless plug here for TribeVest, but a lot of times it depends on, your structure and how you go about structuring your capital raising game. If that's like SPVs and you use TribeVest, then TribeVest does a lot of stuff just like a fund administrator would, right? I used to recommend fund administrators to my clients on the legal side. When they approach maybe 5 to 7 million, somewhere in that range, it might start making sense to hire a fund administration company. But
Yeah.
nowadays, because of technology, because of the way that the industry is moving, TribeVest has made it cheaper to be able to do that. And you can do it when you're raising $500,000 as opposed to $5 million. So a lot of that depends. And then eventually, maybe you want to bring that stuff in house. Maybe you want to bring on a full-time fund administrator. Like you had mentioned, maybe that first hire is a social media or marketing VA, something like that, which is not fund administration. But certainly something that you can take off your plate for, relatively cheap nowadays, especially with AI and the technology that's out there.
Yeah, I'm glad you brought up fund administration, because you're right. Like so many people don't need it. It's really expensive. Like if you want like a full-on fund administrator, I mean, I would want to see somebody, yeah, in like the 25 to $50 million range for some of the fees that they charge. And here's the thing, that that piece of it is it's sometimes the trickiest and the easiest at the same time. So the way I think about capital raising is like an iceberg. And the part of the iceberg that you can see above water is the capital raise part. And then the stuff that you can't see underwater, so the big guy, that's admin. That's actually investor relations. That's fund administration. That's like, is your accounting correct? Are people getting their reports on time? Are the numbers accurate? Like that can be taken off, like you're saying, even with TribeVest, or like some people hire transaction coordinator if they don't have TribeVest. Is like that goes such a long way, because it helps in everything is about investors feeling
Mm.
feeling that they're taken care of, feeling like you have things under control, right? I'm sure you've heard of the book The Psychology of Money by Morgan Housel. And that's the whole premise of that, is money. And we'll talk about it this way, like investing, it's psychological. So it comes down to making sure investors feel that you're capable. And they feel that way if they can see tangible proof of that. And so many of the times that falls into the IR category. Now, deals and how deals are performing and returns, obviously track record, that's a different piece of it. But let's say you're performing really well on your returns, your deal, et cetera, but you're not delivering reports on time, and distributions aren't on time, and nobody's taking care of the investor who says, hey, I need to change my bank account, or I need to, like, those little tiny things really stack up quickly to be the things that matter the most in the long run, when people, maybe we're going through a period of time in a deal where it's not going well, but the investor knows that we're handling the little things. And if you can handle the little things, that means that they feel more comfortable investing with you again, as opposed to somebody that they invest with maybe for a first time because the IRR is high or what have you. And they get excited. Investors, we all do this. We all get excited about the returns, the projections. And then we can get into the deal and nobody's given us any sense of timing. When does the first distribution start? That first distribution didn't hit on time, or I had questions, nobody answered my questions. You've lost your repeat investor at that point, which also means you've lost referrals at that point. So that's what I mean about these little things stack up, and they can stack up in a really good, accretive, and constructive way, or they can actually stack up against you and kind of pull you under.
Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more. Yeah. How have you seen IR change over the last 5 years or so, now that the market is tighter and deals are fewer and far between and returns are not as easy to come by as they used to
Yeah.
be, and a lot of the deals that they haven't gone well, right? The
Yeah.
deals from 2021, 2022, 2023 didn't
Yeah.
go well.
Yeah.
How have you seen IR change? Like, what are people pivoting to and doing differently now than they were doing, let's say, 5 years ago?
Yeah, I think a lot of it is communications. So let's say 2022, 23 was like a lot of capital calls on the equity side. So it was a combination of crisis communication and just being in really unpleasant conversations and situations. Like, I mean, it will shape whoever stays in this game after this, right? I think it really shapes them as somebody who can really say, well, I went through that downturn, and it should shape the way underwriting is performed going forward, et cetera. But I think the IR function really shifted from a capital raising function to this crisis, almost like a risk management function, in the sense of like your reputational risk, the risk of the deals, like potential losses, actual losses, and how those have been handled. And the truth is that not everybody invested in deals in 21, 22. So like there's two parts of this like investor pool as we think about IR. The people who have no exposure to any of the bad deals, they have one, let's say, like, we can't talk to everybody as though everybody had a capital call. So you kind of have to think about, you have to have different, you have to think about your communications really differently. Like, you have to project confidence for new investors and existing investors. And you have to also be speaking with your investors who have capital calls, who have bad deals, and dealing with partially, getting yelled at. People are upset, and like letting that be the case. You have to show up for that. You can't run away from that. Some of those people will never get back. They're burned. They're never coming back. But some of them are coming back because they understand that certain things happened. And if we've been doing a good job in IR of describing what went wrong, where, and like where also we went wrong, and taking ownership of that, I think that that will go a really long way in the IR and capital raise cycle of new deals. So it's just become a heavily communications um, function, partially crisis, partially like we're still here, we're still doing things, we have new deals, there's optimism, especially, I don't know if you've been seeing this, but like in the past, I don't know, 6, 12 months, it's been starting, the market transactionally has been starting to show signs of life on the equity side.
Yeah, seeing the same thing for sure, for sure. I love the dichotomy you made there as far as like investors that maybe were burned in the last few years, and then there's folks that they didn't see that at all, right? And we've been in it for a while, so I don't know. There's kind of this idea that we're just assuming everybody's been through the same things that we have, but that's actually not the case. There's new investors coming in, so you've also got to be optimistic, but also realistic, right? And take accountability and ownership in everything you do. When you're talking to these investors, and I think that they really appreciate that. So you've done a lot of consulting and coaching to
Hmm.
some of the top capital raisers out there. Like,
Hmm.
what are you seeing that's working, right? Whether that's new investors or trying to get older investors back into the game. Like, what are you seeing out there that's really working?
Yeah, man, I think what I'm seeing that's really working, and it's different for different people, but it all comes down to, if I can boil it down to one thing, it's that people are being themselves. And I think you said it really well. Like, there's a realism to it. There's staying power, especially for those that have been through challenging deals and either had losses or have had capital calls. It's they're still showing up. They're still showing up honestly. They're saying genuinely honestly, like, this happened, this is what we're doing over here, this is what we learned, and this is where we see opportunity. And you can't argue with that, right? We don't get emotional. I think the best thing for a lot of them has been also to find ways. I've seen a few people do this, to find ways of rewarding, if you will, or offering existing investors who have been in some previously, like, quote unquote, bad deals, the opportunity to make a different return on future deals. So I'm seeing a lot of people do different things in terms of, like, it's not that we have to make up for what people lost, because, you know, supposedly and actually we all go into a deal taking risks that we should know, we should be reading the ppm, et cetera. That's not always how, humans work. So we're not supposed to make up for losses, and but I think I've seen this a lot, and it does go a long way to say, hey, we really appreciate that this happened, it's not what we wanted, we are sorry, and we're trying to do something because we think it's the right thing to do. And they might sweeten the deal some way on future returns. And they're not saying, it's not like a forcing of people, but it's like, hey, this is on the table and this is our way of taking responsibility in a different way. So I've seen this, like, mix of things, but ultimately the thing that it comes down to is people are just being very real about, we've all gone through this, we made some mistakes, this is how we've learned, this is what we're doing going forward. And like I said before, not everybody's going to come with us, but and the contrast to that would be somebody who doesn't even acknowledge that anything happened, or deflects responsibility, like, oh, I was just a fund manager, that was a bad deal, like, don't do that. I don't think anybody's doing that, but that attitude of that would be a really terrible thing. That's not going to get you anywhere with your investors. Pretending it never happened, and or being overly exuberant about something new, right? I think that we had a lot of over exuberance for a few years there in that early post-pandemic phase, and we can't do that anymore, right? There's a lot of overexuberance in the stock market right now. And we also have to understand that we're competing with people's money that is currently, like, flying in the stock market. So, where on the real estate side, a lot of people are being more conservative. So this is an interesting
Yeah.
place, right? We're being more conservative on the real estate side now with returns. I haven't seen crazy silly IRRs lately. Um, and then on the flip side, we have people that'll probably say, yeah, but my Palantir stock is up 140% in the past 6 months. And so we're also still kind of fighting this, like, over exuberance here. I say stay the course on being more conservative, because we know the value of real estate. And I think something else that I really personally appreciate is not telling people not to be in the stock market, right? It's, you do what you want. Here's another option. So not trying to, like, overexert this sense of you should only be in private assets. I think we need to take a more, like, even ourselves, like, a diversified approach of saying, like, hey, if you have some here, a good offset could be over here. This is what we've seen. This is how things have changed. This is how we're underwriting now. We see this as a better opportunity, because the cost basis of a lot of things is a lot better today than it was before. So I just think those people that can have a very measured approach and be self-accountable, self-responsible, self-aware in that approach and really relate to people as people and not as salesmen, those are the ones in my mind that are going to go the farthest.
Yeah, that makes a lot of sense. I mean, these words are overused, genuine and
Mhm.
authentic and those types
Yeah.
of words, but it's true, right? Like especially
Yeah.
with AI and with its ability to generate tons of copy and blog posts and websites
Yeah.
and whatever. Like you have to be yourself, you have to be genuine. Like people are skeptical of hard sales. Like they're just
Yeah.
turned off by that nowadays. So it just doesn't
Yeah.
work anymore. They're just too
Yeah.
skeptical. Like as soon as they feel that, they're just like, forget it. Like I'm
Yeah.
walking away. So you've got to be real with them to
Hmm.
get anywhere. And you mentioned the stock market. I remember that used to be kind of one of the pillars in our our messaging is like get
Yeah.
away from the stock market roller
Yeah.
coaster, right? Like,
Yeah.
but it's like if you say that now, it's kind of like, well, look at the stock market though. It's crushing
Hmm.
it. Why that doesn't make any sense. So you've got to be
Yeah.
aware of what you're saying, and it can't just be this, the same message that we've been saying for 10
Yeah.
years for sure.
Absolutely. Yeah.
Yeah. Any predictions on where you see the private investing space going in the near future? The technology is just through the roof right now. Like it's been absolutely
Yeah.
insane. Like one parallel I always like to draw is like there's usually some sort of regulation followed by some sort of technology. Like
Hmm.
in the securities space, like the 1930s and 1940s acts, like those were passed then, and then we had the internet way later, like in the 90s. And that's when you saw, the public markets just go through the roof and people had access, right? And I feel like
Yeah.
the same thing is happening with the private markets, but the timing's been a little bit crazy with COVID and then
Yeah.
with the markets kind of chilling out here. But we had the Jobs Act of 2012. There's a
Yeah.
regulation. And now
Yeah.
I think we have the technology. The technology is AI. It's all these things, Web3, all these things that are
Yeah.
here now, but they also have only been here for a couple of years to the mainstream. And the real estate market and the private sector has been pretty slow. So when those two
Yeah.
things kind of collide, what do you anticipate seeing?
Yeah, that's a great question. I think the collision is going to be potentially in February of 2026. If I'm not sure how it works, if it's ratified or what have you, but it's the administration's attempt to allow 401ks to invest in private assets.
Mm.
So that was something that came up a few months ago, was like had like a couple headlines, but headlines today are, I mean, they're basically 90% AI or geopolitics, but that did come out and there's going to be a vote on passing it or not around February 2026. So to me, that's that confluence of regulations and internet and accessibility. So because we've been and I've been in the like I helped launch the real estate crowdfunding industry in one of the early portals in 2014, so like I've been in this for a really long time, and the technology is in. Here's something for all you capital raisers: have a good investor portal, please. Like you need to do this. Please have a good investor portal. But like, the marketing piece, et cetera, like there's some tech there. You can do so on the public side, all the fractional investing that you can do now, and like Robinhood changed the game. I don't know if private assets go all the way into a Robinhood type app. I mean, that would be incredible if that were the case. But aside from that level of technology, I do think that if 401ks are allowed to invest in private assets, that is going to be a huge boon for people in the private asset space. So that's where I see those two things converging.
Love that. Love that. Let's switch gears a little bit. I always like to
Yeah.
ask guests this. In a parallel universe, tell me about a different version of you. There's usually a few like kind of pivotal moments where if you would have just
Hmm.
went the other way, your life would just be totally different. Now it might not be better or worse, but just like different.
Hmm.
What's that
Hmm.
look like for you?
Um, Gosh, I think had I not traveled to Europe in my college years, a parallel version of me would probably be still living in Canada, like a bank manager somewhere, because I was working at a bank when I was 19. Like I was on this like path to, to management. Um, but I took a more entrepreneurial route, and it hasn't been easy. Like I had a very clear and easy path laid out for me, like almost too easy. And I went on this crazy journey, and like we were talking about before the show too, I've been through a lot of transitional phases. Like I do not have a resume that makes a lot of sense to most people because I've done so much, and I've and so I think a parallel version of me would have been the version my parents wanted when I was a kid, which was like, so my parents are immigrants, like, doctor, lawyer, banker, just like get a good job, buy a house, settle down. And so that would have been that version of me, I think, in a parallel universe. But I have entrepreneurship and innovation in my blood, and so I just can't. I'm always reinventing myself somehow, and yeah, I think that would be it.
Love it, love it. Any limiting beliefs there that you had and you had to overcome it?
To make that choice,
Yeah,
or
yeah, to kind of like break out of that traditional path and go down an
um,
entrepreneurial path.
gosh, I think it was more about disappointing my family at that age.
Hmm.
um because it was young. I mean, you have so much, there's so much less at stake when you don't own a home, and you like, you do, so I don't think, here's the thing, I actually think I didn't think about it. So I didn't have limiting beliefs about it. I had a lot of excitement about it. I would say I almost have more limiting beliefs now in terms of like what's at stake and can I do it, and is it worth it? And those are things that I have a really deep personal practice, and I'm always doing this, like, we can call it personal work or what have you, self-reflection on trying to uncover what those things are. And yeah, as we get a little older, it feels like there's a lot more at stake, maybe because time is different. And so I always have to be really careful about not being old in my thinking, but being that younger version of myself that gets excited and sees it as an opportunity and trusts and believes that no matter what happens, I'm gonna make it. I'm gonna be okay. Because I had like so much more risk tolerance when I was younger
Yeah,
than I do today.
yeah. It's almost like the lack of limiting beliefs allowed you to do it.
Exactly. That's
You
exactly
had
right.
no,
I was
you
like,
had
I'm
zero
doing
limiting
this.
beliefs. Yeah,
None.
zero
Yeah,
limiting
I had
beliefs. Let's
none.
do it.
Yeah, exactly. I'll deal with my angry parents when I see them again. Like I was just like, but you know what I mean? Like it's just, that
Yeah,
was it. It was really just the weight of other people's expectations. I don't have that anymore. I don't care as much anymore. Um, but yeah, that's exactly right. The lack of them.
yeah. You're so multifaceted, and you mentioned like if you looked at your resume, you'd have all these different things, and people like if they didn't know you, they'd be like, "What in the hell is this? Like, what
Hmm.
what what do you mean? Like, how does this make any sense?
Yeah.
Are there any like core values that you hold on to, that you've held on to basically your whole life, and like it's always kind of been like a north star that guides you?
Yeah, I think the primary one for me is independence and freedom. So those two, hyper independent, oftentimes to a fault. I've been really working on interdependence for the past several years, right? And so those are really important to me. And I think it ultimately boils down to a form of wanting to have agency and control over my life and my time and my choices and my decisions. So those have always driven me, and underneath that is I really am visionary, and I love the future, and I love innovation, and I see it as a huge potential game changer in really positive ways. And so I don't I respect, and I have a lot of consideration for history and for what came before us, but I don't want to be put in a box around, well, this is the only way. to do things, right? Like kind of that old way of thinking. And I grew up that way. And then when I moved to Europe, it was very much that way. It was like very like old, like this is your role, this is your position, this is, you go up the ladder, so to speak. And so I really prefer no boxes. I prefer to chart my own course, and that always drives me. But the fundamental layer to that is I want control over my own life.
Yeah, I think a lot of folks out there that are listening to this can relate to that. We're entrepreneurs. Like, we want to control our lives. We don't want someone telling us we have to be here at this time. We don't want to have 20,000 bosses. Like, we want that independence and that freedom of choice to spend our time and our money and
Yeah.
who we want to spend time with. Like, we want all those things.
Yeah, absolutely.
AdaPia, it's been awesome having you on the show. Where can our listeners find out more about you?
Thanks, Seth. I really appreciate that. I have a website, adapiaderico.com, or you can find me on LinkedIn under the same name.
Awesome. Thanks, AdaPia. Really appreciate you.
Thanks, Seth.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.